So we get to the first question. Our moderator today for this FinTech panel will be Andy Lian of Hyundai DAC Technology. I believe we have everyone here, so Andy, when you are ready, you can proceed.
No problem, no problem. So a very good morning to everyone. Before we start off the panel, let's do a quick introduction. Start off with KY.
Yeah, sure. Hi, my name is Kwan Yu. I'm the head of product at Faith, helping merchants in Southeast Asia to grow their businesses through digital payments, loyalty cashback, and other value-added services. Prior to Faith, I led the establishment of Malaysia's first national QR standard and the implementation of national initiative Do It Now QR, real-time payments. I also implemented multiple retail and products, including the banking and QR payment app at Maybank.
Thank you. Joe?
Hi, I'm Joel Yarbrough. I manage Asia Pacific for Rapid, which is a global payment platform focused on making the process of going hyper-local very easy for both local companies and global companies expanding around the world.
Thank you. Varun?
Hi, I'm Varun. I lead the fintech practice for EY for emerging markets globally, work with fintech companies and incumbents who are utilizing the power of technology to bring financial services to the masses, bring access, compatibility, democratization across these different pillars, and looking forward to the discussion today.
Great, and for myself, I'm the advisory board member of Hyundai DAC, the largest car manufacturer arm for blockchain in South Korea. Apart from that, I'm a book author on a book called Blockchain Revolution 2030, and I've been very pro fintech and cryptocurrency and blockchain matters in this region. So let's start off with our panel. The panel is about the Fintech Market Analysis, the impact of interconnectivity in Singapore. As we all know, maybe let me give you a bit of context. Fintech investments in Singapore are very active. It has been more than doubled to about 861 million in 2019. And this morning, our MAS Fintech Chief has mentioned that from year to date, at this current moment, we have about 1.3 billion investments in. I believe that COVID-19 accelerated a fair bit, and pushing Singapore into a more digital rush. Budget are put forth to help smaller businesses, and again, you do see a lot of help that is put forth, in terms of a fintech deployment, for smaller businesses, for payment solution. So the first question would be, what would be the driving growth, driving force behind the contactless payment in the digital transformation in Singapore? How about Varun? Can you share with us your points?
Yeah, so one key part for contactless is everybody's scared to touch everything right now. So even the places where you had a chip and pin, people are trying to push for that. The second part is a lot of marketing money going behind QR. Even Pay Now, and as Kwani mentioned, Malaysia Do It Now. So there's a massive marketing push around QRs. So one side is that direct debit schemes are always on QR. Direct debit schemes won't like contactless. They're designed all contactless. Whether it's Fast Pay Now or Prompt Pay, they are based on non-chip, non-contact form factors. So that plus all the marketing plus the fear of COVID, so nobody wants to touch a card, give the card to somebody, take it back. So all of that combined is his helping. And what that does is a threshold. One consumer starts to use this a few times a day, then for rest of the parts, they start to avoid carrying a wallet and ensuring it's loaded with cash. So that commercial as well as behavioral as well as the marketing push is what's bringing around this change across the board, across markets.
That's a very interesting observation. But as you can see in other parts of the world, like China and so forth, contactless payment has been very mature. How do you see that market going? For Faith, Kwan Yu.
Right. So because as Faith, we operate mostly in Southeast Asia, right? So primarily in Singapore, Malaysia, and Indonesia. So maybe how I'll take the question is from a product or company standpoint, right? So I think everything starts with a problem, right? And then we look at opportunities. So I think cash has really bring about a lot of inconvenience, inefficiencies, as well as a lot of safety and security concerns, especially during this COVID situation right now, right? So with this increasing demand for both digital payments for consumers and also merchants, right? But I think we still see a gap for merchants to adopt a solution that's pretty much suitable to their business needs, right? Not just from a mobile payment standpoint, but also in digital marketing, digital advertising, to be able to acquire and activate more customers firstly, right? And then secondly, for them to be able to have loyalty and rewards to retain their customers, right? And thirdly, data analysis and valuable insights to make smarter informed decisions, right? And I think very importantly for businesses as well is to have financing opportunities, right, for them to expand and their businesses and more, right? So I think key here is really about solving actual problem with the right solution, and I think that's our focus here at Faith.
That's good to know. Hope to see a lot more adoption for that part of payment. Joe, I mean, you have very big experience, in the payment and payment scene. How do you see the growth for this digital payment and digital transformation in Singapore?
Well, to be honest, it's a little bit hard to add anything beyond what Varun and Quan Yu have already said, since they've covered, I think, the landscape. But if you look at the additional context, I would say, is the growth of mobile devices, right? Fast broadband. And that's really driven the growth of large ecosystems, right? So every ecosystem player that has a consumer brand attached to it thinks, and maybe does have the right to go into financial services in some way and to stick people to their ecosystem, whether they're rolling out a narrow wallet just to make their business work a little bit better, or a broad wallet so people can transact in and out. Quan Yu runs a business, provides the product to connect rewards and loyalty and value to that, so this ecosystem becomes stickier and stickier. If you look at the growth of the ride-sharing players, Grab and Gojek, they have this increasing wave of marketplaces that are being folded into their core offering. And all of those are ultimately versions of contactless payments where the users are known to one another through this marketplace, not just where Varun started with kind of the chip and pin or the tap of the card. These ecosystems become stickier and stickier. And given that Southeast Asia is a global leader in mobile, global leader in social, these ecosystems are very, very powerful here relative to a lot of other regions around the world. So I think we expect the growth of digital payments and inherently contactless payments to continue to increase as more and more branded consumer ecosystems have a larger hold on the population.
Yeah, that's good to hear, and I do hope to see a faster growth, and that would definitely bring up a lot of new opportunities actually. So let's go to the second question. In total, we have 5 questions to share, and the second question would be, where do you see the greatest potential in terms of fintech expansion in Singapore? Because as you can see right now, fintech has been growing, ever evolving. At the same time, early fintech players like PayPal are at no risk of going out of date. And most recently, PayPal has also put up some good words that they are even looking at cryptocurrency payments as well. So how do you see the growth, Joe?
If you look at any wallet ecosystem, and I'll kind of broaden that to fintech, you're kind of looking at one of 4 drivers of value, right? Speed and efficiency, security, value, meaning price or rewards, or ultimately access to credit. And that's true if you're a bank, it's true if you're a fintech, it hasn't changed in thousands of years. Ultimately, that's why financial intermediaries exist. I think one of the challenges that a lot of the existing fintechs that you see, particularly in the wallet space, have is they're dumping a lot of promotions in the market to drive behavior and creating an artificial experience of value that isn't really there once the rewards get pulled back, once the promos get pulled back. You can see consumer behavior change literally in a day. So they're not as sticky as they could be. The stickiest thing long term, and like I said, for thousands of years, is actually credit. And that's an area where the market is very undersupplied. It's undersupplied on the consumer side. It's undersupplied on the small business side in particular. And ultimately, I would say that's the greatest area of opportunity is to bring more people into the credit market, use intelligent data and access to this ecosystem data to underwrite them more effectively, and give them new forms of credit or even just traditional forms of credit with better access. That'll help the flywheel move much more quickly. I think that's really the biggest single area. And I'll let Varun and Kwan Yu come up with the next biggest area.
Sure. Okay. So Kwan Yu's name is mentioned. So what do you think, Kwan Yu?
Yeah, so I think overall, Singapore is an international hub with very effective partnerships and relationship, right? And Singapore has very good support from both public and also private sectors. And I think very importantly is also that MAS is at the forefront of these regulations and frameworks. And I think one last thing that I really like about Singapore is really a long-term approach and the do it right mindset, right, in both planning and execution, right? So I think the greatest potential for me, probably two areas, right? One is mobile payments and the other being consumer lending, right? So in the mobile payment space, I think we should be seeing a lot more consolidation and collaboration in the months and years to come, right? And I think it would be a rather interesting journey and outcome from the Singapore digital banking rates, right? So very interested to see how that goes. And I think on consumer lending as well, we have seen the success of Klarna in Europe, Afterpay in Australia and more, right? And these BNPL services have also made their way into Singapore. We have seen the rise of Atom, Hula, Rely, and more in Singapore, right? And I think this is a rather interesting use case, targeting consumers with age between 18 and 35, right? And these consumers typically do not have or could not have credit cards, right? And the average ticket size that we are looking at here is also a couple of $100, right? And this is essentially for the millennials to be able to purchase new pair of sneakers, a new cosmetic set, a new Nespresso machine or something else, right? As compared to olden days, whereby it's mostly targeted at larger purchases using traditional credit card installments.
Okay. Varun?
Yeah, so the way I look at it is slightly, I would say, contrarian from that perspective. The key thing is how a lot of these companies are going to run sustainable businesses, because for last 5 years they have been like private equities, VCs funding it, and now when it comes to actually, can you actually generate revenue off this? Can you generate sustainable revenue off this? And premise, just think of it: you raise $20 million at 140 million valuation. Can you sell for any? Is anybody going to put 140 million cash on table for it? Probably not. So when that reality comes in, and that's coming closer, and that for me will trigger a lot of consolidation. So that's one side, and the other side is the regulations. If you see, the biggest companies in China have now been asked by regulators, like, guys, either you are a bank or you're not one. You can't be in the middle of things. So that the passion of playing in the gray is running out, and usually China moves slow, but when they do, they move it with a lot of force. It happened with P2P lending, and we can see now where did the whole global P2P lending landscape ended. Most of the P2P lenders in US, Europe either have sold, or most, not all, most. So which is why I would put a lot of pragmatism around how regulations are going to play. And everybody who's playing on a lot of these regulatory arbitrage will need to pick up safe shores to play the next round. The round of Wild West is over.
Yeah, I think time will tell. Actually, in the good fintech days, there are really a lot of investment that went into companies that are very much overvaluated, and a lot of them fail. And again, I think that is not a wrong process, but it is a process where innovation is felt, where you can see more innovation. Some of them are not that sustainable, and they went off grid or they closed down. I guess that is normal for industry that is that early. Coming back to the point where we talk about China and the recent Alibaba Alipay situation, I do believe that in Singapore, because of MAS, how we govern our regulations and making sure everyone is in the right check and balance stage. I don't really see that thing happening. But again, I have to say that the potential in Singapore is very high, and things will continue to grow. So let's go to question number 3. Where we look at adoption. A lot of estimations are putting the adoption rate of digital payment platform at an all-time high. That is seen, especially so during the COVID-19 period. Even for cloud native companies, this represents capacity challenges. How do you deal with speeding up deployment to match this demand? KY?
Sure. So I think we have heard a lot from the cloud and data center experts earlier, right? So I'll take the question from a product lens, right? So from product lens of how we basically build and also implement digital products to meet our consumers' demand, right? So I think at Faith, we really believe in a win-win collaboration with the partners that we work with, right? To be able to be universal and at the same time interoperable in payments and also rewards, right? So in terms of source of fund, today we allow our consumers to link their debit and credit card across Visa, MasterCard, Amex, and we also allow users to link their existing e-wallet accounts, right? So in Singapore, we support GrabPay. In Malaysia, we have GrabPay and also Boost, and in Indonesia, we have OVO, right? And on top of that, we also allow consumers to purchase deals on our platform through their online banking, right? So they are able to access, log in, and then make their payment accordingly. And from a national QR standard and also cross-border acceptance perspective, for Faith, firstly, we are partnering with Alipay, right, to allow inbound Chinese tourists to come to Malaysia and Singapore, make payments to our merchants using their Alipay app. Right, and in Singapore itself today, we are already part of the SGQR wheel. And in Malaysia, a couple of months ago, we have also announced that we are partnering with PayNet, the payments network for Malaysia, right, to basically be a merchant acquirer of the Do It Now QR, right? And really soon, I hope we will already be able to launch that, right? And just a couple of months ago, we have also launched our open loyalty network, starting with Singapore, partnering with DBS and also Singtel, to allow DBS Paylah and also Singtel Dash users to use their respective apps and make payment to our merchants and still earn our loyalty merchant cashback.
That's good to hear. Joe?
I think Kwan Yu started to touch on it, right? The large problem that's slowing down deployment is ultimately the infrastructure cost and the level of effort that has to be made to adopt payments, to settle payments, to go into new markets, etc. The marginal ROI is pretty poor, but at the same time, the market's becoming more and more diverse in every country around the world. And so really the way to solve for that is to become much more of a platform solution, and for merchants and people who need to accept or disperse funds to leverage platforms, right? You heard Kwan Yu mention a number of payment offerings that they're making on a B2B basis as they start to go from being a consumer from one-off business relationship to much more of a service platform. Platforms like Rapid do that exact same thing, right? So we offer more than 1,000 payment methods around the world in 130 countries because this problem isn't getting simpler anywhere around the world. As regulators start to follow the MAS's model and really encourage innovation, and there's a number of other innovative regulators around the world, you see competitors looking at each other across borders and being inspired in a lot of ways by what's working other places and then spawning new variations of things, right? Just the Afterpay example with lots of BNPLs coming along or being inspired by Klarna or Affirm or whoever. So if you're a merchant and you want to accept money from consumers, you have to start offering more and more and more things, right? And unless that's your day job, the reality is you're never going to be able to do it. You're never going to be fully relevant in the markets you want to operate in. So really relying on a platform over time or multiple platforms over time is an essential way to grow without actually increasing your complexity or your cost to serve your customers. So I think that's really the key to the speeding up of deployment to meet the consumer demand.
I think both panelists have talked about more from the product standpoint and from a platform standpoint. But how do you see Varun in terms of the actual adoption in the day-to-day life? Do you see the uptake of using fintech technology in Singapore, especially so for the slightly older generation? And do you think that there's a need to have a more educational or more awareness-driven campaign to make sure that the adoption is matching up to the demand?
So the way I look at it is this, right? There's no point trying to force something down. People see value, they will do it themselves. People saw value a few hours, they started embracing it. Any number of marketing, messaging, and everything doesn't change it drastically. What is important is to ensure that a lot of these fintech companies can then ensure that there is a follow-through support, dispute resolution. Those things are being built up. Because a lot of times you hear the news that people started to use a specific solution, and then there was a call center, was a chatbot, and which did not work properly. So the key part is not every time in life it is good to force fast forward things. If they're moving, they've grown significantly. They will grow at their own pace. There's no need to rush. The speed is not always good. Speed is not always good. Steady, stable, much better. So steady.
I agree with you. So let's go to the question number 4, where we talk about a bit on blockchain and a bit about how blockchain is influencing the fintech market. As you can see right now, there are many adoption in terms of blockchain payment that is in the market, like Ripple, and also most recently there's a lot of hoo-ha and talk about this central bank digital currency as well. How do you see that influencing the current blockchain market landscape, Joe?
I think, for me personally, I think the most compelling use case is really the one you touched on with central bank currency. Really, the digitization of currency, helping in particular cross-border trades settle 24/7 with transparent foreign exchange, is incredibly powerful. Right? If the total size of the payments world in reality is about $180 trillion, the vast majority of that, right north of 170, is really going through a slow rail today. And there's a huge opportunity to make that money move faster. Right? If that money moves faster, that means the cost of credit goes down, working capital is freed up for business, the economy grows much faster. I think that's super powerful. I think privately issued currencies are much less powerful, particularly when fiat currency or the digitization through central bank currency is really on the horizon anyway. I think that's what we'll see ultimately the most uptake, along with something totally separate, which is the tokenization of assets of value, right? So data derived products, bills of sale, things like that, which then supports the full digitization of a transaction for a particular industry.
True. I think that is a good summary and view from Joe. But I also do see another quick question, a side question, is that whenever we talk about blockchain, we talk about cryptocurrency as well. And of course, there are some main cryptocurrencies around, in the market, from BNB or Ripple, XRP, and so forth. These are all considered more stable ones, in the crypto manner. Do you think platforms like Faith will embrace such technology and put it into your system when the time comes?
Yeah, so I think for Faith, it's really about what problems are we trying to solve, right? And I'll be honest, I think at this point of time, we don't see a real need for us to leverage on blockchain to be able to allow our merchants to grow their business further through digital payments and also loyalty. Not at this point of time, at least.
I see. What about Joe? Do you think if PayPal is going after that market, do you think the rest of the platform provider or fintech provider will ride on that wave, like TransferWise, Revolut, and so forth?
I think ultimately, if a consumer wants to pay with a particular form of payment or currency, payment providers will follow along. If you go back 4 or 5 years ago, a number of gateways started to offer Bitcoin and other things as forms of payment. And the reality is merchants didn't want to accept it and consumers didn't want to pay with it. Right? So they were actually taken away because the demand wasn't there. the demand on the Bitcoin, let's call it investor standpoint, was for investment, right? It was viewed as a long-term hold or a short-term hold, but it really wasn't a transaction currency, nor was it especially good as a transaction currency because the speed of settlement wasn't there. It created kind of a weird experience for people. I think if you look at Square or PayPal starting to offer it, in reality, what they're offering is basically a closed loop model where you can buy the currency, but you have to buy it from them, and you can't send it. You have to sell it back to them during a merchant transaction, or that's just to change it back into fiat. So they could just as easily say, look, we're selling ETFs, right, or mutual funds or any other index asset, and then liquidate those assets for a transaction. And as long as this particular asset class is interesting, sure, great. I would argue that both of them are really getting the infrastructure in place, both to benefit from liquidity trading because people are stuck at home in COVID, but then also just to get ready for the central bank currencies and to be an effective platform for an open digital currency model through fiat central banking currencies that will be open to deposit and open to withdraw from these wallets. Right? I don't think they have a huge interest in opening up to privately issued currencies because it creates AML and counterterrorism concerns for them that really cannot be effectively addressed.
Thanks for sharing. So just to sum up and also share a bit of views on my end, I've been talking to different governments on cryptocurrency and fintech matters, and also the central bank digital currency. Some of the more innovative ones are looking at using a stable coin or the core group of coins to act as a bridge to facilitate some of their CBDCs initiative. And I don't see that happening extremely soon, but I do hope to see some actions going forward, in 2021. With that, we have to thank everybody, the panelists and those who were online listening to our talk. And let's work harder to bring more fintech initiative and growth into Singapore. Thank you, everyone.
Thank you, Andy.
Thanks, Joe. Thanks, KY.
Thank you guys for joining. Sorry that we had to rush towards the end there, but I want to make sure we have time for our final panel here, and we will definitely have more fintech conversations